Hi everyone, my name is Lim Yik Chien, metric number 261882. Today, I would like to present the case 5, Caribbean Brewers, Transfer Pricing, Ethics, and Governance. First of all, I would like to talk about the introduction for this case 5. There are two main companies in this case, which is Caribbean Brewers and Guerra International. Caribbean Brewer is a 75% owned subsidiary of Guerra International, a conglomerate in the business of brewing and distributing beers. It is an event which contributed to the later issue which the production facility of Caribbean Brewers expanded in 2008 through a 10-year amortizing loan from Guerra International, thereby effectively doubling the production capacity. All the production of Guerra beers which produced by Guerra International before for the Eastern Caribbean region was transferred to Caribbean Brewers after the brand expansion. The brand expansion later led to a lot of issues, and I will discuss in the following questions. The question 1 for this case is how can a majority shareholder shift wealth through accounting cost allocation and transfer pricing? Firstly, we should understand what is cost allocation and transfer pricing to answer this question. Cost allocation is the method of assigning costs to the project. It involves the process of identify, aggregate, and assign cost to cost object. It can be used in the derivation of transfer prices between subsidiaries. For transfer pricing, is a system of pricing the goods and services that are transferred to associated departments or organizations which will provide several advantages. In other words, the transfer pricing enables the shareholder to avoid taxation at all costs by transferring its business operation into countries where tax stability are significantly favorable. So, back to the question. The majority shareholder in a corporation has complete control to the company, which means the majority shareholder will be able to make decisions for the company's operation and investment, while the minority shareholder would only take part in voting sessions, which only able to approve or reject the proposal. Therefore, it gives an opportunity to the majority shareholder to shift wealth by allocating additional costs and allowing subsidiaries to employ transfer pricing to save costs. In this case, the majority shareholders is Guerra International, who hold 75% of share of Caribbean Brewers. The Guerra International is later using the accounting cost allocation and transfer pricing to shift wealth through Caribbean Brewers. Question 2. How was it done in the case of Caribbean Brewer? For the cost allocations, the treatment of cost of the bottles for exported Guerra beers and Thai beers is different. In this case, the cost of the bottles for Thai beers is treated as cost, while the cost for the bottles for all exported Guerra beers is treated as expenses by Guerra International. The different treatment in the cost of bottles before and after the brand expansion in 2008 led to the decline in production efficiency of Caribbean Brewers as compared to previous years. For the transfer pricing, there are an important things to take note. Caribbean Brewers is the tax resident for Antigua, with whom will be taxed for 30% of the profit. All Guerra beers produced by Caribbean Brewers was exported to Guerra Caribbean, which is a wholly owned subsidiary of Guerra International that located in Bermuda, a tax-free jurisdiction. The exported Guerra beer only sold for $25 as compared to sell in domestic for $50. As Caribbean Brewers, it decreased the profit of Caribbean Brewers, which will lower the tax on its profit, while for Guerra Caribbean, it provides a lower cost and later contribute to higher profit, and the higher profit will not be just since Bermuda is a tax-free jurisdiction. This can be proved as an intentional strategy by Guerra International, which the expansion of production facility of Caribbean Brewer in 2008 only increased the sales volume of export Guerra beers, which increased from 59,000 in 2008 to 825,000 in 2009 and 1.19 million in 2010. And all the sales volume of domestic Guerra beers and Thai beer had no significantly changed from year to year. Question 3. Who is harmed by the wealth shifting discussed above? The first group of reading with the minority shareholders. of Caribbean Brewers is because the accounting cost allocation and transfer pricing strategy applied by BKAL International will lower the net profit of Caribbean brewers, especially for the selling price of exported BKAL beers at only $25 as compared to the selling price in domestic at $50 per case. As an example, the sales volume exported BKAL beers is 825,000 cases, which approximately led to a lower profit of 21 million. When there are lower net profit, the dividend paid by the Caribbean brewer to the shareholders will become lower. It affects the minority shareholder of Caribbean brewers as compared to the majority shareholder, because the majority shareholder is BKAL International. Although BKAL International will receive less dividend from Caribbean brewers, but they will receive more dividend from BKAL Caribbean, which from a tax-free jurisdiction. Hence, the most important victim in the dividend is the minority shareholder such as Jason Joseph. In addition, Jason Joseph, or known as JJ, also had an agreement between him and BKAL International, which JJ, as the production manager of Caribbean Brewers, will receive the bonus based on the production efficiency. As discussed above, due to the cost allocation method, the production efficiency of Caribbean Brewers will decline. Hence, the bonus will be penalized since the efficiency of the production facility goes down due to the different treatment of cost of water for Thai port beers and BKAL beers. After that, the second victim who will be harmed by the wealth shifting is the government of Antigua. Caribbean brewer which located in Antigua should be charged for 30% of its profit. However, the transfer pricing strategy of the BKAL International applied to the Caribbean brewers, which lowered the selling price of exported BKAL beers to only $25, will result in lower profit of Caribbean brewers. Hence, the Caribbean brewers will only need to pay relatively lower tax expense to the Antigua government as compared to if Caribbean brewers sells at $50 as a normal business. Question 4. As an advisor to the CFO of Caribbean brewers, to whom are you responsible? First, I need to responsible to CFO, which my primary task is to help CFO in reporting to the board of directors, advice regarding the financial matters through policies, procedures, and processes. In addition, I also need to help CFO in forecasting and preparing budgets along with all financially reporting and addressing possible financial issues to CFO. Next, I also need to prepare completed and understandable financial statement along with the taxable and non-taxable product lines to the head of accountant of Caribbean brewers. Other than that, I also need to resolve the issues that the production managers of Caribbean brewers, Jason Joseph, which regarding bonus, quality of beers, and the production efficiency. Notwithstanding, as a member of MIA, I am responsible to comply with the code of ethics, which include professional behavior, integrity, confidentiality, competence and due care, and objectivity. Hence, what I advise to the CFO of Caribbean brewers should not be contrary to the code of ethics of MIA. The last question would be what are the implications of the composition of the board members to the reporting of the CFO. In this case, the most impacted group might be the minority shareholders. CFO of Caribbean brewers will be able to acknowledge the board members about the issues that are currently happening in Caribbean brewers regarding the net profit, different treatment of costs, significant difference of selling price of exported BKAL beers, production of efficiencies, and etc. However, since the majority shareholders, the BKAL International, actually obtain more profit as compared to solve it, they might not wish to make amendment. For the minority shareholder, such as Jason Joseph, would like to resolve those issues, but the last decision will be through the voting session, and there are 75% of shares held by BKAL International. Hence, it brings most impact to the minority shareholder instead of majority shareholders. In conclusions, although the cost allocations and transfer pricing strategies of this case is legal in law, however, its unethical in terms of this strategy would be harm the minority shareholders. This is all from me. Thank you for watching this video.